Cholamandalam Investment Finance is the next company which is on radar. Reported a strong set for the fourth quarter. We have Arul Selvan, President and Chief Financial Officer of the company, to take us through some questions. Sir, good morning. Great to have you with us here. Prashant this side. A good set. But although I want to start with something slightly on the negative side, which is credit costs, which remain high at about 1.4% in a seasonally strong quarter. Could you give us a sense of what you saw and what we should expect in FY26, sir?
Sure. See, the credit cost had not reduced to the extent it would have reduced in any given Q4, as if you see last year Q3 versus Q4, across products, including vehicle finance. So to that extent, there had been a little bit of a higher cost. Apart from that, what we have also done is the business on fintech, which we have been exiting, we created a certain one-time provision, because as we move down and reduce the exposure there, you will have certain hits on the balance portfolio, which is running down. So to that extent, we created incremental provisions. Both these put together has kept the credit cost little elevated. FY26, we should see around 15 to 20 basis points credit cost on a full year basis as compared to current year. That's what we are targeting as we move into FY26.
Has Mr. Selvan, has stress generally sort of increasing? Is it what is your sense? Also, talk to us a little bit about growth. I mean, AUM growth, I think, has slowed down a little bit if you look at on a quarter-on-quarter basis, especially newer segments, etc. Yeah. So what's happening?
See, AUM growth in the traditional products continue to be better, especially in the mortgage businesses. In vehicle finance, it has been a little muted considering the slowdown in the auto. But we are moving into other products like used and two-wheeler to keep the vehicle finance AUM, chugging along. New products, yes, there has been a bit of a reshuffle as when we reduce the fintech exposure, we have consciously brought down the exposure there, but that would be compensated by our foray into consumer durables, which we have started. We have been doing Samsung Mobile earlier. Apart from that, we have now started other products also. So that would start picking up to make the new product disbursements and the AUM growth bring back to its old levels. However, overall unsecured, we are holding our target at around 10% of the overall portfolio, so that would not breach that number. But other products will continue to grow.
So 10% is the capping you are putting at, putting for unsecured loans.
Yes.
And overall growth has been really solid, sir. I'm looking at the AUM growth. I mean, you're up almost 27% year on year, 6% quarter on quarter. All segments have done well. But talk to us about your gold plans, because the gold market is where there's a lot of competition. NBFC is fighting to retain their turfs. Banks have been aggressive. The RBI is changing regulation. What are your plans on the gold financing side?
No, like any other product, we would start slow and build it over a period, because, as we don't jump in with both legs into the water, we will go slow. We are starting with 100 and odd branches initially. So we are targeting around 1,500 to 2,000 crores in the first year. As we move on and we get comfortable with the product, we will scale it up. As you know, here we cannot leverage the existing branches. We need to create new branches. So we are in the process of creating new branches, because the operation structure in the branches are different. So we need to create new branches. We are in the process of doing it. We already started opening branches across East and South region. But we will move slowly. Sorry. Yeah.
Sorry, sir. My question was, we were just trying to understand why you're looking at this avenue. Isn't this already a crowded market? Like I said, so many players, ever-changing regulation, fight for turf. I mean, do you feel that your existing large segments like CV financing, etc., do you see a plateau ahead? Is that why you are opening up the gold avenue? And again, as a percentage of the book, like you mentioned, unsecured won't go beyond 10%. Eventually, say 2 years down the line, as a percentage of the book, where would you want gold to stabilize at?
See, it's not that the other products are slowing down, and that's where we are going into gold. Our long-range plan is that Chola will be a complete end-to-end lending institution where we will offer products, especially in the secured side. We will have the full exposure built across all products. Gold is a product where you have better security and a better return. As I know, it is crowded, but there our credibility will come into play as a credible player and a well-known name, and the trust of the customers would come into play. We have seen a large amount of vehicle finance borrowers also doing gold loan. So that is what we are wanting to try and tap into to see that whether we could bring those customers into our fold. We will do it slowly. As of now, I would rather not give a number on the gold, because if it pans out well, yes, we can scale it up. But if it does not, we will be slow to learn and pick up, and we will pick up and do it. It is highly regulated. As you know, the recent regulations have come in which are actually in a way good, because we start with the new regulations and we do not have to go back on what we have done. So that all these augurs well for us to enter at the right moment with the full regulatory framework in place.
All right, Mr. Selvan, do you think that, other listed players like, say, a Manappuram and Muthu, they were having, too easy a ride, and there's an ample opportunity out there. So you said, let's go take some part of that pie.
I don't want to say anything of that sort. Yes, there are enough and more in a growing economy like India. In India, I would rather say the unorganized segment is still a large, the bottom of the pyramid, as what we used to project. That's a large segment which is moving into organized segment progressively, and that opportunity with a credible name like Chola can be tapped into and grown. And especially in the rural market where we are strong and our name has been well known, we see that this would be a good opportunity for us to tap into.
All right. And so for the first year, it'll be around 1,500 crores is the target. Is that correct?
I would say so, yes.
All right. Let's get a couple of numbers out of the way then. AUM growth for the year, what should it be looking at? And if you could bifurcate it in terms of segments. And also, if you could tell us, what about NIMS? You could get some kind of benefit because the cost of borrowing will go down. So how do you see yields as well as NIMS going ahead?
Yeah, on the AUM first, I will answer that we still target the same 20 to 25% growth as we move into FY26 with all the products, with the mix of all the products coming into play. The mortgage business would certainly have a slightly better improvement as we move into these segments into this year. And on the NIM side, yes, we will see improvement because cost of funds would improve, but it will not be a step change immediately because a large part of our borrowing still is relying on the MCLR change of banks. And if MCLR change, then we will see the step change. Otherwise, the marginal borrowings would be the one where we will see the benefit, but certainly you will see NIMs improving. We will have to share some part of this cost of fund reduction on the floating rate products, which are the mortgage products. But we will see the benefit coming through on vehicle finance where the book is of a fixed rate.
Right. Mr. Selvan, just a quick last clarification before we thank you, sir. On credit cost, when Prashant asked you, you did mention that you're looking at maybe 15 to 20 bips. So that's higher. Could you just tell us FY25? What was the credit cost final number and where do you see it in FY26?
See, we closed the year with around 1.3% on assets on the credit cost, and we think we should do it at around 1 point. We'll close at around 1.2 or lower as we move into FY26.
Your credit cost will go down then, you're saying, from 1.3 to 1.2.
Certainly, our target is to keep it below 1.2, and we should try to do that, yes. Yes.
Okay. All right. So thank you very much for joining in for that clarification. Thank you. We'll just correct that flash as well. Now it's completely clear. From 1.3%, the credit cost for Chola will go down to 1.2% this year. So we'll just rework the numbers on the screen there as well.